Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Markets will now likely continue to price out the possibility of an RBA rate cut in February after the fourth quarter inflation rose by a quicker than expected pace. Earlier on Wednesday, the data published by the Australian Bureau of Statistics revealed that the annual inflation, as measured by the Consumer Price Index, the CPI, ticked up to 1.8 in the fourth quarter from 1.7. Meanwhile, the trimmed mean core CPI remained unchanged at 1.6 year on year. It is assessed that with the dragonfly doji, the market should stage a recovery very soon, although not looking that impressive at the moment, even though we are extremely oversold. If we do see a break of 67.05, then this will give further risk down to challenge the multi-year lows of 66. Let me move this 66.60 to 80. From a technical point, this is getting very, very concerning because the MACD on the weekly is still quite heavy. So let's see if the markets will reflect on the dragonfly doji, which is bullish. If we do see a turnaround, then we could see a rise up towards 67.75, which held yesterday after a high around 76, and then above there 68.20 cap in. The euro also ignoring the hammer after posted yesterday, and a bearish case come back into play and took the challenge back to the downside, with the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied nearly and claimed the 98 handle after posting a high of 97.98. It is assessed though that with the widely expected Federal Reserve interest rates on hold, is that the dollar could show further strength and therefore could put further pressure on the 109.55.85 level. Now do note a break beneath there would give further scope down towards 108.15. Safe haven demand continues as the fast moving virus outside of China is of grave concern and has prompted the World Health Organization, known as WHO, to convene an emergency meeting this week to decide whether it's become a global health emergency. With the dollar in slightly weaker, but the yen strength is the main core here, and especially on the crosses, we could see a move down towards 108.2040, which I'm still calling. Technically, we are bearish. Well, it's Super Thursday, meaning that the fact all eyes turn to the Bank of England, with the MPC members still on a sideline of 50-50 chance of one part of the group wanting a cut and the other side not. May see a cut later tonight. Anyway, keep an eye if you are trading to the pound. A break of 129.10 would give further scope to the downside and give concerns of a strong fall down to 124. Also, this Friday, Brexit will happen after 3 years of back and forth when Britain leaves the EU. And let's see what happens with the pound. Gold is still holding above the level of 60.63 after briefly contesting of 63 overnight. From the outlook, further risk is to the upside, and I do feel the market will go on to re-challenge the highs of around 86 to 88 or to the 7-year highs around 1,600 and figure 15, which is here, after posting a high of 11. Dips are likely to be shallow, but do note that although we're trading as high around 78 at the moment, gold can easily drop back towards a support. But nevertheless, I feel the demand should increase. And looking up towards the last of the markets of oil, looks like we're having a little bit of trouble here when it comes to finding the bulls. Nevertheless, looking at the weekly pattern, if we do continue to be a little bit softer, there is support around 51.5 to 50.5 as a broad base. And I do expect to see a recovery very soon. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new day.